as I quickly turn it over to Paul and Steve to talk about MFIs and Mojaloop, the lessons from Myanmar.
Hi, everybody. All right, this has all worked. Hi, my name is Steve Haley. I'm working with the Mojaloop team on advocacy and go-to-market largely, working with the Motusbox Economic Development team. First, I want to introduce Paul Luchtenberg. He's the country coordinator at UNCDF Myanmar. He's actually been my partner on this project. A lot of you have heard me talk about it, but he's been my partner in the background for the past 2 or 3 years. And so I'm excited for him to get to his first Mojaloop convening. So with that, Paul, please take it away and get us started.
Okay. Thanks, Steve. Good morning, good evening, good afternoon, everyone. Thank you, Steve. We're really excited about what's happening in Myanmar. We'd like to share about it. So we can go next slide. So I think it's important to start with the Myanmar context because it really lays the foundation for what we've been doing and what we see as the need. So Myanmar is coming out of decades of exclusion, and it's experienced great progress, but still there's major challenges. And we think of it oftentimes in terms of a triple transition, moving from war to peace, even though war continues on and has actually increased during the COVID time, moving from military to civil democracy, although it's very fragile democracy, it has moved and really is a political miracle what's happened in Myanmar. I mean, if you think back, less than a decade ago, it was unthinkable that the country would be open like it is now. And then from autocracy to an open and inclusive development, and we're, as a development partner, taking advantage of that. So some of the development challenges we face is the government is in a complicated equilibrium. And that's why I say it's a political miracle, but it's a very fragile situation with the government. And there's a time factor, but there's ongoing challenges with an election coming up in a couple weeks. But recently, like political candidates kidnapped. The economy and financial sector is in transition. It's been nascent, but growing. There's low agriculture productivity, even though 70% of the people live in the rural areas. Extreme vulnerability to natural disasters. It's the third most vulnerable country in the world to natural disasters. And then complex disasters. I think everyone's heard of the Rohingya situation, which is one of the largest complex disasters in the world. And then a large unserved, marginalized population, especially women who have been underserved. So this situation sounds really bad and challenging, but at the same time, it's really a great opportunity. And combined with COVID, which has really sped up the project, which we'll talk about, has made this a fertile ground and really shows the need for the digital services. Okay, next slide. So what is the problem? It's building on the challenges which I've noted, but also just a reminder to all of us that because people at the bottom of the pyramid have the greatest need for improved financial service, better, more conveniently provided, and at a lower cost. And we believe that these people will be eventually served, but not necessarily those who have the best interest at heart. And I just think of something like payday lenders in the States or other kind of predatory lenders which take advantage of the situation. So eventually it'll come, but we want to ensure that people have the financial services done in a more equitable way. So in thinking about this, we believe that effectively and sustainably reach the marginalized is best done by empowering organizations that are committed to going down market and passing on benefits to clients. And so in Myanmar, the greatest advances have been in the microfinance sector, and I'll talk about that in the next slide. So globally, we know that microfinance has taken off and has really become huge. And I'm an old microfinance guy, so I have my sort of a bit of a bias there to microfinance. But I know of the great potential. So it's 140 million clients, majority 80% women, majority rural. Service to a financially underserved market with annual growth rates of 10%, but growing much faster in many other places. And Myanmar has about 5 million microfinance clients now, growing very quickly, and more than 150 MFIs. So if we look at the right side of the screen, you can see that where is credit coming from? So we have done some research to understand financial inclusion within Myanmar. We did a countrywide extensive map study in 2013 and then in 2018, 2019. And we found that if you looked at informal credit was at 18%, has gone down to 13%. So that's a great gain, great achievement of the country. The people going to banks, 14%, stayed about 14%. People borrowing from family and friends decreased by from 11% to 7%. But the really dramatic increase was a formal non-banked MFIs, primarily MFIs, somewhat the cooperatives, but primarily microfinance institutions, jumped from 5% to 13%. So this has been the fastest growing area. So there was great improvements in financial inclusion. And when you drug down a little bit, it was primarily microfinance. Additionally, microfinance institutions, I'd say, are the most dynamic, looking for new ways to move forward and improve their products and improve their services. So they see that payments can help microfinance to improve their service to clients, the time savings, reduce cost and interest rates, and offer new products and services. So this need, combined with the dynamism of the microfinance industry, really it made them a prime candidate for working together. So real-time payments, starting with loan repayments, but then we plan to expand in time to loan disbursements, savings deposits, and a great range of other services. It's just a starting point with repayments. And as MFIs have caught the vision, we see this expanding and moving into different areas. So what's happening in Myanmar is really on the forefront of what we believe is an upcoming transformation. Next slide. So our vision is really that there'd be greater financial inclusion by enabling microfinance institutions, who, as I mentioned, we see as a key player in this, to offer their clients secure, low cost, and reliable real-time payments. And we hope that Myanmar in a few years will be looked at as a world leader in creating an inclusive digital economy. And I'll pass it on to Steve to talk more about the details of what we've done in the project and some of the lessons learned. Thanks.
Okay, thanks, Paul. All right. So building on what Paul talked about is that around the world, MFIs are still actually largely trying to catch up with this innovation that we call mobile money. And what we're trying to do is leapfrog past that. And that's what I'm going to get into for the remainder of this presentation. So first, the problem. I mean, you can see the diagram we've often shown where with bilateral connectivity and bilateral integrations. The challenge is that the MFIs are largely left outside of the payment system, whether it's Mojaloop or anything else. And so they're still stuck with these bilateral integrations. And the challenge is each integration is incredibly costly and insecure. Reconciliation is often done manually using Excel. Settlement is sometimes usually delayed by at least 3 days. Very often it's actually delayed by 10 days. Disputes are largely ad hoc and are different across different integrations of MFIs and mobile money companies. And that leads to consumer confusion. And so that means that the solution isn't scalable. Right now, it's working in a functionally dysfunctional way, meaning that if you can get to 200 transactions a day, which is where around some of the more advanced MFIs are right now, it's doable, but you're never going to get to the point where you can actually be doing a measurable percentage of your transactions digitally, because it's not scalable. Even if you think about that settlement delay that I talked about of even 3 to 5 days over a single MFI, they could be losing anywhere between 250 and 500,000, even up to $1 million in interest income per year on that capital not being utilized. And that's just a massive cost for an MFI that's already serving the poor and is already operating on a shoestring budget. And not only does each connection cost more than the average and provide a worse experience, but then the MFIs have to do it for every single different mobile money company. And what that means is they have to select one or two that they want to work with, rather than creating a level playing field among all of the mobile money companies. Now, I mean, I guess we're at a Mojaloop convening, so I have to talk about why interoperability is better. But what we're talking about here is, why is interoperability for MFIs and for their use cases so important, yet so often overlooked? And so with this project, we actually wanted to solve two problems at once. First is that we're enabling a lower cost, more secure because transmitting Excel spreadsheets over unsecure email is not secure. So a lower cost, more secure way for MFI clients to repay their loans through mobile money and any mobile money operator. But second, we want to help the MFI industry, which kind of missed this mobile money innovation by not reacting quickly enough, be ready for the real-time payments innovation that the Mojaloop community is kind of leading. And so we do this by acknowledging that this bilateral chart that we're showing here is not going to work. Just like it doesn't work for mobile money and banks, doesn't work for MFIs. So this is what we are proposing in this project, which is a industry level switch for microfinance. So MFIs only need to do one integration, one settlement, and it's same day, as if everything in level one, and one dispute process, all to reduce the cost and increase the scale of loan repayments, whether that loan repayment's at an agent or at a wallet. Now, ideally, MFIs are going to be invited to join the national payment system of the banks and mobile money. But let's be honest, in most markets, it's not going to be feasible for them from a political or regulatory standpoint. The regulators and the banks and the mobile money are just not quite ready to invite MFIs into the national payment system. Now, that's the problem we're trying to overcome. But in the meantime, having an industry level switch is actually a pretty good intermediary solution. And the other challenge I'll get into that in a minute. But and so it's in Myanmar in particular, it's interesting, and this is why we think Myanmar is such a great market to demonstrate the value of this in other countries, like Paul was talking about, is that Myanmar has a great story with the microfinance industry and in the credit bureau. The government and the banks have been working on a credit bureau project, like in a lot of countries, for a long time. And the MFIs were dropped off of the project, even though they are by far the biggest retail lenders in the country. And so what the MFIs did was they got together with a trusted technology partner, and they created a data sharing initiative that allowed them to actually check for double lending and reduce over indebtedness amongst their clients. They did that while the rest of the industry, the banking industry, is still trying to figure out a credit bureau. And we're seeing them do that again here, where it takes the machinery of central banks and bankers a long time to get moving, but the MFI industry is actually moving much faster. And so that's why we think that they've got that all of that collaboration in place from this data exchange sharing initiative. So, but there are still a lot of challenges to including MFIs in either the national payment system or in their own subnational system. The first is that the bias of national payment systems towards banks and mobile money, both in the rules, but also in the use cases. Even if MFIs are included, our loan repayment is going to be included as a priority use case, probably not for years in most countries. Second, the MFI core banking systems generally are not easy for payments. They're built for loan portfolio management, and that's changing. And I think that there's some good stories around that, but that is still an issue. Also, MFI operations are not running 24/7. And as everyone knows, we're talking 24/7 ops here. The MFIs are also not resourced for digital integrations. All of that is largely outsourced to their core banking vendors, which, as it turns out, is not as bad of a thing as we had anticipated. The lack of industry collaboration. Now, MFIs in most countries are actually much better at collaborating than banks. They're by nature a collaborative industry. However, they don't tend to collaborate on payments. And so this was a new type of collaboration for them. And the need to include clients' digital financial literacy. MFI clients are actually usually the last to adopt digital financial services. We're talking about people who are some of the most underserved and hard to reach. That's why microfinance is actually addressing them. So it's both a challenge and an opportunity to bring all of those clients into the digital financial ecosystem with a trusted advisor of their loan officer. And next was the need for the regulatory go-ahead, and that's an additional challenge compared to most other areas we look at, because microfinance regulators are not used to dealing with payments, and so which regulator is supposed to be managing this is always going to be a challenge. And so that's why we created this project as a way of tackling these challenges one by one and using a hands-on experience of a Mojaloop lab to actually learn where were these challenges and how can we overcome them. So first, an overview of the project that we've already completed together with UNCDF. It had 4 main objectives aimed at learning how to tackle those challenges, which all drove for a facilitated cross-industry collaboration with massive industry buy-in from the MFI leadership, but then also bringing in the mobile money operators. The end result showed great potential for taking this forward. And so the first one though is the use case design. And so we've talked a lot about the technical and operational interoperability challenges, but the biggest accomplishment that we're proud of for this is the consumer experience interoperability, which means that we now have a common use case design that means that whatever happens in the back end, that it means if any MFI client goes to any mobile money agent, she's going to have the same experience. And that's better for clients. It's better for loan officers. It's better for getting people into the market when you have a common experience. And when we first took the MFIs through this common design process, that was the first step. We accelerated it, but on purpose to get it done quickly, because they made some decisions about their design that we actually disagreed very hard with. And Miller, if you're still listening, you would really disagree with some of these decisions. But we wanted to let them make those decisions because then once they got to the lab, they could see for themselves, oh, if we changed it this way, it would actually turn to be a better experience for our clients. And that was the purpose of the lab, and it served that purpose. And now we're in the process of building version 2 of that use case. And because even in the beginning, some of the MFIs even had a hard time grasping the concept of a common experience. And a lot of them actually grasped it, but didn't believe it was possible. So the next thing we did was an assessment of the MFI capacities to onboard and participate, which brought a significant amount of information that we can take to other markets. We did the Mojaloop training program, which I'm going to talk about in an hour. And we also gave them an introduction to real-time payments in Mojaloop for MFIs. And lastly, we built the lab environment for them to test in. So but what I just talked about was the project that we did with UNCDF. Now, that project was actually what we're calling phase 0. The larger project is building a payment scheme, and that's something that's new to MFIs. And so if we're going to take them through this, we want to take it through in a stepwise process, showing them a 80-page scheme rules document would have been overwhelming on day one. And so what we want to do is tackle these things one thing at a time. And so the last slide, like I said, showed phase 0. And it was, and let me see if I can, where we really focused on the use case design and then on integrating that use case into a Mojaloop lab. And the next step, though, was key. So yeah, that next step of the integration of the Mojaloop lab for the MFIs because it allowed us not only to understand the challenges that they would face in the onboarding, but also for them to get a hands-on experience with the use case, like I said. And now we're ready to start moving on to the rules, because they have a much better understanding of what we meant by real-time payments and a use case. And that goes to something Adrian was saying during Leslie Ann's presentation. Seeing this use case of loan repayments in action made all the difference. Being able to see that they could go to 2 different mobile money wallets and have the exact same experience and watch the transaction hit their back end in real time made all the difference. And so the purpose of those 2 steps, if you look along, let's see if I can, over here, the purpose of the first 2 steps was to demonstrate the client value. Now we're moving into phase 1 and 2, and the purpose there is to demonstrate the cost and the risk, and that's associated with the scheme rules. And then at the end of that is where we start saying, okay, now we understand how much value this thing creates, and now we also understand how much cost is associated with it. We can actually have a rational industry conversation around the pricing. And we actually got a lot of resistance from people who wanted to talk pricing up front. And we were really hard about this, saying, we don't think that everyone at the table is ready to have the pricing conversation yet. So let's wait until we've done the full analysis of the value and the full analysis of the cost before we decide how much we're gonna price it at. So for anyone who's actually dug into Mojaloop, you would say, wait, MFI loan repayments, even at 100% doing 5 million transactions per month of a single use case is throwing a massive solution at a relatively small problem. Mojaloop is overkill if we're just going to be doing loan repayments, but it's. And it could be done much simpler, but the point is we're starting with loan repayments. And that's the first step on this journey of an industry-wide digital transformation for the MFI sector. Loan repayments are actually the simplest. It's the thing that the industry was wanting first and the market is asking for. And it's the most urgent, particularly with COVID. And so it was the easiest thing to get people started and moving and show progress and show momentum. But it's probably actually not going to be sustainable in and of itself. But it was a good idea to get to know what are the challenges we're going to face. Next, we get into loan disbursements. And loan disbursements are actually incredibly interesting from a number of angles. First, it's a source of funds to wallets and bank accounts, which leads to other types of revenue for mobile money and banks and other payments. And it solves a massive industry problem that we always have, is how can you get low-income communities to get their money digitized? Cash in at agents is just not going to work. And mobile money is actually microfinance is dispersing a significant amount of cash into the market. And so as a way of digitizing the source of funds into low-income communities at the source, we think MFI, the loan disbursement use case, is going to be incredibly important. And the next one is the savings, deposits, and withdrawals. Savings has always been kind of the goal of microfinance in a lot of markets, but the challenge is very often that it's just not convenient. And it has to be convenient to deposit, and it has to be convenient to withdraw. And you have to be able to do something with it once you've saved it. And so current microfinance offerings just don't incentivize savings behavior enough or make it easy enough. So by allowing it to be any mobile money agent for cash in, cash out, will drastically increase the convenience of savings. And so that's the one that a lot of the MFIs are quite interested. The next one is actually one that I think is quite interesting, which is the B2B payments. Because let's remember that most microfinance clients are actually micro and small enterprises. And so a lot of them are getting decent loans. And the first thing they have to do is pay a relatively large amount of that loan to a supplier. And that supplier is often going to be banked. And so there's no reason for us to have to take that into cash and then redigitize it once it goes to the supplier in a bank. They should just be able to pay directly to their supplier from their loan account. And then we can move on to other things like ATM withdrawals and even cross-border loan repayments, which is one that we're actually looking at for Myanmar. So like I said, we're trying to create the model digitized MFI industry in Myanmar, which then is going to be replicable to other markets, and also a replicable process for how we get there. All right. So now to talk about some of the lessons that we've learned here. Again, the biggest purpose of this project was not direct financial, so far at least, was not direct financial inclusion of the MFI clients, but to learn what it would take to expand this project. The first thing was that everyone needs to buy into the bigger vision. There's going to be a lot of questions that aren't answered. I mean, you saw that stepwise chart that I showed. We don't have those answers yet. And so it means that you have to, the MFI leaders had to buy into the vision to be able to put up with not knowing everything right up front, and deal with that uncertainty, and invest even knowing there is that uncertainty. And so part of that also was, and then the other part of that is communication, regular communication. We've been doing regular fortnightly calls with the MFIs. We keep doing these fortnightly calls with all the MFI leaders and even the leaders of the mobile money providers. All of the meetings are recorded. All of the trainings are recorded. Everything is on online for participants and non-participants to check out. We also have to have dedicated MFI leadership and ownership of the process. We needed just a few of the leaders to drive the agenda, but then moving quickly to larger numbers who would follow. And we found that that's actually exactly what happened. Don't worry about getting everybody on board first. Just get a certain mass of leaders who can take it forward. And I mean, the other thing as an aside, we confirmed what a lot of you would probably know is that when it comes to interoperability, market leaders are interoperability laggards. As we expected, the market leaders were the last ones to join. But having that, and the part of that regular communication among these dedicated leaders is to build rapport and mutual respect, because that trust is definitely required to be on this long 2 to 3 or continuous journey that the MFI industry is going to be on. And so that's why it was important to have that regular communication. I touched on this before, but those few individual champions in the industry are incredibly important, even if it's just 2 who are willing to just rally everyone around the cause. If you don't have that, it's really going to be impossible. So that would be the first thing we would recommend everyone needs to do. Second, it's not possible to design the best system. So it's better to start with something visible, which then proves value and iterate from there. And that's what we discovered with doing that, doing the lab environment, was showing them the use case and then iterating on it rather than trying to get the final solution. That was a change in mindset for a lot of the industry leaders, to the idea of saying something is done and really knowing it's not done yet. We're going to come back to it in a couple of months. So that hands-on, and the other thing is that hands-on experience required kind of that personal investment by the MFIs and give us a chance to get to know the people below the CEO level. And that was definitely required to take this forward. Number 4, there's that getting your hands dirty and doing something. Projects can't be done through PowerPoint or consultants or vague trainings that come in. It needs to be active learning on behalf of the MFIs. And again, going back to building trust by actually doing something, not just trust among themselves, but trust in the process. If you do a report, if you do a presentation and you come back 3 months later or 6 months later, or sometimes a year later, everyone has forgotten and they don't believe you that this is going forward. You have to show them regular progress as an industry every couple of weeks. The number 5 there, a lot of people assume that they say, oh no, MFIs are too backwards. They're not ready for that. They were a lot more nimble than anyone anticipated. In fact, they were much more nimble than the mobile money operators and the banks. They were able to make quick decisions. They were able to get the resources that they needed to get things done. Whereas a lot of the mobile money providers and banks were, incredibly bureaucratic behemoths that had difficult decision-making processes and were highly transactional. whereas the MFIs had the ability to make decisions based off of vision. And so we found them to be easier to work with and much more nimble than we had anticipated. And I do want to call out that, I mean, having strong leaders and having good core banking systems was key to that. So just to mention for the record, Mambu, Fern, Finflux, and I mean, really have to call out Musoni, and Finflux based off of Mifos and all the great work they've done. But Musoni, the team really drove this with their clients and was a great partner for us. And then lastly is leaving the commercials out, having a roadmap. We probably screwed that up by not having that roadmap as clear as we should have. But really leaving the commercials out of the picture until people understand the value. And until they saw it, until they felt it, until they touched it, they didn't understand the value. All right, so then what comes next? We just finished phase 0. UNCDF and the Bill and Melinda Gates Foundation are starting a new project. Phase 1 is 6 months to actually get to a production-ready system and onboard more of the DFSPs. And then phase 2, which is 12 months, is going to be adding loan disbursements and G2P payments or bulk disbursement and onboarding more DFSPs, also establishing the governance structure and the transition to local ownership and operations. That's an ongoing process, and hopefully Paul will be able to tell you more about it here in the next couple of weeks. But we're quite excited to see it go forward. Paul, real quick, is there anything you want to add on this slide? If not, it's okay.
Yeah, thanks, Steve. Yeah, we're excited in partnership with the Bill and Melinda Gates Foundation to really take this forward. You can see there's been a good foundation, and we look forward to open bidding and looking forward to how we take this to the next phase.
Okay.
Thank you.
Thanks,
very
Paul.
much.
All right, and the last thing I want to end on is really a call to action. So, as I mentioned in passing, I mean, we've been working heavily with a number of core banking vendors, including Musoni, and the CEOs of a lot of the international MFIs who have talked to their other branches in other markets and see this as really the opportunity to turn the MFI industry in Myanmar into the model future digital MFI industry. And the next phase is we're hoping to start with this, and UNCDF is leading a project in Tanzania that we hope kicks off the project there next. And really, we're on the lookout now for partners who see that same global vision that we described for the MFI industry. So other global organizations like UNCDF, other MFI investors, I think, are going to be key stakeholders, trainers and organizations that support MFIs, and other technology providers. And I mean, there are a few who are here today that I know we've already talked about this, and looking forward to your global partnership. So if you believe in this vision, if it sounds like something that sounds like we've formed a replicable process, please let us know. Reach out to me, reach out to Paul. And like I mentioned at the beginning, Paul and I have actually been working on this together for like 2 or 3 years. This has been together with the MFI industry in Myanmar. And it's built on my experience with mobile money and MFIs in Myanmar, and Paul's long experience with MFIs in Southeast Asia. But if we're going to take this to other markets, we're really going to need partners and others who can take it on. So if it sounds like something you're interested in doing, please reach out to us. We're really looking for partners for this expansion.
Thanks so much, Paul and Steve. Appreciate you guys.